We see gold has to stay above the $4,000 an ounce range. Once it solidifies above that, then we see it going much higher. Fed slips nearly $30 billion into cash-starved U.S. banking sector. Barely reported. Banks are going to go bust. There's going to be an office building bust. You're looking at your office occupancy rate only around 55%. There's going to be huge failures in banks. They're not reporting this. Oh, the ECB plans to test the digital euro for 2027. Yep, digital euro, as we said, from dirty cash to digital trash. With Christmas time coming up and you're seeing they're hiring less and less people, the worst is coming soon.
In today's news recap, gold slips more than 1% on stronger dollar as market awaits U.S. jobs data. Gold prices fell more than 1% on Tuesday as the dollar hit 3-month highs, while traders awaited U.S. economic data for clues on the Federal Reserve's monetary policy path. The dollar index traded at 3-month highs, making gold more expensive for other currency holders. With the dollar making new highs, we're seeing that having a weight on the gold market. Some of this recent strength in dollar and the weight in the gold market comes from the less likelihood of a potential rate cut in December, said David Meger, director of metals trading at High Ridge Futures. Now, you guys, it's pretty clear that narratives are shifting from buy now before it's even higher to it may go sideways for a sustainable period of time, which is positive for stackers who want to increase their holdings without paying higher and higher prices to do so. Although the U.S. Central Bank cut interest rates last week, Fed Chair Jerome Powell suggested the reduction in borrowing costs might be the last of the year. Traders now see a 71% chance of a rate cut at the Fed's December meeting, compared with more than 90% a week earlier, CME Group's FedWatch tool showed. With the U.S. government shutdown likely to become the longest ever, halting the release of government data, investors are focusing more closely on non-official economic reports, including the ADP National Employment Report, due to be released on Wednesday. Bullion, which has gained 53% this year, has dropped by more than 9% from its record high on October 20th. Gold is losing some froth while still pricing in concerns over Fed independence and the possibility of stagflation, as well as underlying geopolitical risk and international tensions. Some of the froth has been blown off in a much-needed correction, Rona O'Connell, an analyst at StoneX, said in a note. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
You saw the markets today. The NASDAQ slumped over 2%. The S&P fell over 1%, and the Dow was down 251 points. And that Planetaire shares shed about 8%, right? But they were up more than 150% this year. And they're trading at 200 times earnings. So here you have the P ratios are way out of line. And now the media is talking about the AI bust. And we call it the dot-com bust 2.0. They're way overinvested in these companies. And again, that's your magazine cover going back to February 5th of this year. And we called it on January 28th. Oracle fell 4% lower, but their stock's up some 50% this year. I mean, it's ridiculous. The crash could well be happening now. And this guy, David Solomon from Goldman Sachs last night said, quote, there'll likely be a 10 to 20% drawdown in equity markets sometimes in the next 12 to 24 months. One or 2 years. We believe it's going to happen earlier. And again, your magazine shows it in the sense that what's going on with the banks, how they're bailing them out, and they're hardly talking about it. Brent crude, it's still selling in the $64 a barrel range. Again, OPEC Plus is pushing out more oil. They need more dough, so you got much more supply than demand. And again, there's going to be a global slowdown. Dragflation is going to be dragged down economies and increasing inflation. Inflation's not going to stop. Gold was down nearly $70 an ounce today, lower than I would have thought it was going. And the dollar's going up. And why? I have no idea. But, you know, one of the reasons is less confidence in that they're going to lower interest rates. And remember, subscribe to the Trends Journal. We're giving you history before it happens, and hit the subscribe button on this because we're getting shadow banned and taken off. The numbers aren't where they used to be. And again, we're giving you what nobody else in the world is giving you for the grand total of $2.59 a week in the Trends Journal. So really, hit the link, subscribe, and spread the word. Bitcoin was down below $100,000 a coin. It was high as what, $124,000, but it's still way up there. And now it's like its lowest number, for a while. So we're still bullish on it because the Trump team is in it, and they're going to keep. Nothing goes straight up or straight down. And again, I want to make it really, really important. Watch this election and what happens in New York City today. This is very, very important. And gold, going back to gold, as we see it, gold has to stay above the $4,000 an ounce range. Once it solidifies above that, then we see it going much higher. And again, the wars are ramping up in the Middle East and Ukraine. And here, you got just a couple of articles here.
In today's news recap, gold stuck in a range as trade optimism and Fed signals cap upside. Gold has been stuck in a range for the past 5 days, struggling to regain momentum after falling around 10% from the record high of $4,381 reached in October. The yellow metal remains under pressure after 2 straight weeks of declines, with uncertainty over future U.S. interest rate cuts and easing trade tensions dulling its safe haven appeal. Bullion's weakness comes despite the Federal Reserve's 25 basis point rate cut last week. Fed Chair Jerome Powell's comment that further cuts were not a foregone conclusion tempered investor optimism and lifted the dollar, weighing on gold. That cautious tone, echoed by several Fed officials, has seen traders scale back bets on another rate reduction in December, leaving gold struggling for direction. The situation in gold and silver has been the classic sell the news. As we pointed out in our channel right after major media covered the rally, it's been pretty much flat, which is great for stackers to buy more. For the same exact reason, I'd be very wary of citing any bankster promoting gold and silver now, because they're the ones looking to take the other side of the trade. The outlook was further dampened by easing geopolitical tensions after U.S. President Donald Trump and Chinese President Xi Jinping pledged to reduce trade barriers during last week's meeting in Busan. While the talks stopped short of a full trade deal, the framework for tariff reductions and increased Chinese imports of American goods helped calm markets and, in turn, capped demand for gold. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
Israel violates ceasefire agreement. Netanyahu orders powerful strikes on Gaza. Israel stealing more Palestinian land, begins dividing Gaza in half. Israel violates ceasefire, continues to bomb Lebanon with U.S. support. And they're also bombing Syria, taking more land from them. It's going to keep ramping up. And the Ukraine war is ramping up. They're hitting important oil sites in Russia. And we said this was going to happen. And by the way, because of the sanctions that the United States put on Russia with oil, remember Joe Biden, Genocide Joe, who stole about $250 billion of our money to keep the Ukraine war going? He said Putin's going to pay the price. No, the Germans are paying the price. The cost of energy in Germany has gone up nearly 33% since the war began in 2022, February. So it's very, very stupid crap. And it's all going to go, we've been writing over years. When the economy falls, jobs go with it. Today IBM announced they're cutting 3,000 jobs. It goes back to the economy. The equity markets have zero to do with Main Street. There's no relationship between Main Street and Wall Street. And we mentioned this before. Oxfam came out with we didn't actually mention it before, it just happened Monday. They came out with a new report that shows how the rich are getting much richer and how everybody else is getting much poorer. And this is in America particularly. This used to be the land of opportunity. It's gone. It's gone. And again, it goes back to that election today in New York City to see what's going to happen. So you're going to see more and more job cuts, and then they say AI is going to cut a lot more out of them. Fed slips nearly $30 billion into cash-starved U.S. banking sector. Yep. Barely reported. Barely reported. The banks are going to go bust. There's going to be an office building bust. You're looking at your office occupancy rate only around 55%. And your office vacancy rate is around 20%, was around 11% before the COVID war in 2019. There's going to be huge failures in banks. They're not reporting this. They're not reporting the buildings that are being sold for a fraction of what they were bought for. And when the dot-com bust happens, it's going to be the beginning of the end of the equity markets. And remember, when all else fails, they take you to war. And when the dot-com busts happen, get ready for war. What else do we have here? Markets fragility events reach a record number. New poll confirms consumers' dark mood. Again, 70% of America's gross domestic product, nearly, is based on consumer spending. So with all these job cuts, with wages going below real inflation, with Christmas time coming up and you're seeing they're hiring less and less people, the worst is coming soon economically. And article, new trade agreement leaves key issues unresolved. The ECB plans to test digital euro for 2027. Yep. Digital euro, as we said, from dirty cash to digital trash. That's the way the world is going. They want to know every penny you spent, what you spent it on, where you spent it. There you got it. Yep. We can spy on you. We'll know all about you. And most importantly, we get your taxes. And I'm tired of calling these taxes. Call it thievery. They misspelt the word.
What do you think of today's show? Do you agree with Celente? Will gold consolidate around the $4,000 area for a while before shooting back up? Or on the contrary, is the bull market over? Are you buying Bitcoin instead? Post in the comments section down below your honest opinion and share with the stackers your game plan. Thanks for watching now. Peep this video right here because you'll love it, and I'll see you on the other side.